Over the past few weeks, one of the most frequent questions I've been asked by clients, investors and contacts around the world is whether international investors are actually leaving the UAE because of the current tensions involving Iran. It's a very understandable concern. Whenever geopolitical uncertainty starts dominating the headlines, perception can shift extremely quickly. For investors who are not based in the region, distance tends to amplify risk. From financial centres such as London, New York, Hong Kong, the Middle East can sometimes be viewed as one single geopolitical zone rather than a region made up of very different economies, very different leadership structures, and very different long-term strategies. Because of that, the natural assumption is often that capital will retreat. People see headlines, they hear the word conflict, they hear the word escalation, and they immediately assume that investors will pull back, that sentiment will collapse, and that property markets in the region will weaken sharply. But the reality, as is often the case in markets, is much more nuanced than the headline. When you look beyond the noise and start looking at what's actually happening inside the UAE property market, the picture is far more measured, and in many ways far more logical. What we are seeing is not mass departure of international investors. What we are seeing is a change in the rhythm. Transaction timelines are lengthening slightly. Some buyers are becoming more cautious. Certain negotiations are taking longer to conclude. Some people who were close to making a decision are choosing to wait a little longer for the additional clarity. That is not unusual. That's not irrational. And more importantly, that is not the same thing as investors losing belief in the UAE. Real estate is not a reactive asset class in the same way as equities, foreign exchange, or commodities can be. Property decisions tend to involve significant capital, long-term planning, financial structures, family considerations, residency considerations, and in many cases, a broader wealth strategy. So when uncertainty increases, people naturally slow down. They ask more questions. They assess risk more carefully. They become more deliberate. That is very different from saying they're leaving. And I think this is where a lot of the misunderstanding comes in. There's a major difference between short-term pause in decision-making and a long-term reversal in capital conviction. At the moment, what we are seeing is more of the former than the latter. In fact, one of the clearest dynamics visible in the market right now is the difference between short-term participants and long-term strategic investors. Short-term participants are naturally more sensitive to sentiment. They tend to focus on timing, momentum, and immediate price movement. In many cases, they are looking for a strong short-term entry, a quick uplift, or high opportunistic deal structure. When headlines become volatile, this group tends to step back first, because their strategy depends heavily on confidence and momentum. This is normal, but long-term investors are behaving very differently. The people who genuinely believe in the UAE's future, the people who understand the 5, 10-year or even 30-year direction of this country, are not looking at the current situation as though it changes the entire investment case. They're looking at it as a blip. A serious blip, yes. A phase that needs to be monitored, yes, but a blip within a much larger trajectory. And that is a very important distinction. Because if your investment thesis on the UAE was only valid when headlines were calm, then probably it wasn't a very strong thesis to begin with. The investors who remain confident are usually the ones who are looking beyond the current week or even the current quarter. They are looking at population growth. They are looking at infrastructure delivery. They are looking at trade connectivity. They are looking at policy direction. They are looking at how Dubai and the wider UAE continue to position themselves in relation to global capital, talent, and business migration. When you analyse the country through that lens, it becomes much easier to understand why serious investors are not suddenly abandoning the market. One of the main reasons the UAE property market has shown resilience historically is because its growth has not been built purely on hype. Yes, there have been speculative periods. Yes, there have been moments of very aggressive optimism. But the deeper story of the last 2 decades is one of real transformation. Dubai in particular has deliberately positioned itself as a global city. Not just a regional city, not just a tourism destination, a global city. A place where people can live, work, invest, build companies, preserve wealth, and connect internationally. That transformation has been supported by very deliberate planning. The city has invested in aviation, logistics, tourism, financial services, hospitality, technology, infrastructure, and urban development. The UAE as a whole has created a regulatory and tax environment that is increasingly attractive for business owners, professionals, and wealthy families. Property ownership has become much more accessible for international buyers, while residency reforms have helped turn short-term interest into long-term settlement. That matters. Because when a property market is supported by actual economic participation, actual migration, and actual wealth creation, it behaves very differently from a market driven purely by speculative sentiment. And that is exactly why short-term geopolitical pressure does not automatically translate into long-term structural damage. Another point that is often missed, especially by commentators outside the region, is that a very significant proportion of UAE property market activity comes from people who are already here. A lot of external analysis treats the market as though it rises or falls slowly on new foreign buyers arriving every month. That is simply not the full story. A substantial amount of activity comes from residents. People who have been living here for years and now want to buy rather than rent. Entrepreneurs who have built profitable businesses and want to deploy capital locally. Families who have outgrown one property and are upgrading to another. Investors who already own assets in the market and are repositioning into different communities, different price brackets, or different strategies. That internal liquidity matters enormously. Because even when some international buyers become cautious, the market does not suddenly freeze. There is movement, there is still demand, there is still capital inside the system. And that internal demand is one of the reasons the UAE market has often proved more resilient than outside observers expect. There is also another side to this conversation, which is that periods of uncertainty can actually produce healthier market behaviour. When sentiment is extremely optimistic, buyers can become overheated. Buyers can start overbidding, sellers become unrealistic, developers feel less pressure to offer flexibility. Decision-making becomes rushed and in some cases less disciplined. When uncertainty enters the picture, markets often rebalance. Buyers become more selective, sellers become more realistic. Developers may introduce incentives, payment plans, or stronger terms to maintain transaction flow. Negotiations become more balanced. And for serious long-term investors, that can create opportunity. This is something experienced capital understands very well. The best opportunities are not always found when everyone is euphoric. Often they are found when a market is slightly slower, slightly more cautious, and slightly more open to reason. That does not mean conflict is a good thing. It does not mean risk should be ignored. It simply means that sophisticated investors understand that temporary hesitation can produce better entry conditions. Because property markets rarely move in straight lines. They expand during optimism, they consolidate during uncertainty, and then often accelerate again once clarity returns. Dubai has shown this repeatedly. It has gone through phases of expansion, correction, recovery, and renewed momentum. It has faced global financial disruption, a pandemic, periods of regional uncertainty, and major shifts in global capital flows. Yet the long-term direction of the city has continued forward. And that historical memory matters, because investors who have been in this market for a longer time are not looking at this period in isolation. They are comparing it to previous cycles. They understand that short-term sentiment shocks do happen. They understand that deal flow can slow temporarily. But they also understand that this market has repeatedly shown an ability to bounce back stronger once the immediate uncertainty begins to settle. And that is one of the key messages here. In the short term, yes, we are seeing some slowdown. Yes, some sales are taking longer. Yes, some international buyers are more hesitant. But the people who truly believe in the UAE's future are not treating this as a reason to walk away. They are treating this as a moment to stay calm, to assess properly, and to make decisions based on long-term fundamentals rather than short-term emotion. And if you look at those fundamentals, the broader investment case remains compelling. The UAE continues to position itself as a bridge between East and West. It continues to attract entrepreneurs, professionals, and capital from around the world. It continues to invest heavily in infrastructure. It continues to diversify its economy. It continues to create an environment that is attractive both for wealth preservation and wealth creation. These are not small points. These are the foundations of long-term demand. And that is why long-term investors are still engaged. They are not blind to the risk. They are not ignoring the headlines. They are simply weighting those headlines differently. They are asking a different question. Not what happens this week, but where is this country likely to be in 5 years, in 10 years, in 20 years? That is the mindset of strategic capital. And if you adopt that mindset, the picture becomes much clearer. A temporary geopolitical shock can absolutely affect sentiment. It can absolutely slow deal velocity. It can absolutely create hesitation amongst buyers who are less familiar with the region. But that's not the same as saying the UAE long-term investment appeal has broken down. In many ways, this is precisely the kind of period that tests conviction. And markets often reveal a lot during moments like this. They reveal who is only there for momentum. They reveal who genuinely understands the location. They reveal who is acting emotionally and who is acting strategically. At this moment, what I think we're seeing in the market is becoming more selective rather than collapsing. Weaker hands may pause, the more speculative participants may wait. But the stronger capital, the longer term capital, the more informed capital is still watching very closely and in many cases still moving. That is also why viewings are continuing. Funds are being deployed. Developments are still launching. The market may not feel as aggressive as it does during peak momentum phase, but the engine has not stopped. It's simply become more measured. And quite often measured markets are healthier than emotional markets. Another important element here is reputation. The UAE has spent years building a reputation as a safe, stable and globally connected place to live and do business. That reputation is not built in a week, and it's not lost in a week either. It's built through consistency, it's built through leadership, it's built through infrastructure, security, responsiveness and economic performance. So when the country faces a period of regional tension, serious investors do not look at just the headlines itself. They look at how the country responds. They look at institutional strength. They look at resilience. And that response matters a great deal in preserving investor confidence. We also have to remember that globally, capital is always comparing relative options. Investors are not making decisions in a vacuum. They are looking at the UAE relative to Europe, relative to the UK, relative to the US, relative to Asia. And when they do that, they are not only thinking about geopolitical tension, they are also thinking about taxation, regulatory burden, inflation, quality of life, economic growth, regional yields, currency exposure, and long-term opportunity. That comparative analysis often still works very strongly in the UAE's favour. So when people ask whether international investors are actually leaving because of the Iran situation, my honest answer is this. Some are pausing, some are becoming more cautious, some are taking longer to decide. But that is very different from saying they are leaving in any meaningful structural sense. Short-term momentum may soften, decision-making may become more deliberate, deal timelines may stretch, but long-term conviction in the UAE remains very much alive. And historically, markets like this do not simply stabilise once uncertainty begins to settle. They often rebound with renewed strength. Why? Because delayed demand returns, confidence rebuilds, and capital that spent a period watching from the sidelines often comes back in quicker once the picture becomes clearer. And that's why experienced investors focus so heavily on perspective. Because in real estate, success is very rarely determined by reacting to the next headline. It is shaped by understanding the direction of long-term capital. It is shaped by understanding the direction of capital over the long term. It is shaped by knowing the difference between noise and structural change. And it is shaped by having the discipline to remain rational when others become emotional. So if you're looking at the UAE property market and asking yourself whether this is a reason to step away, I think the more useful question is this. Has anything fundamentally changed about the long-term direction of the UAE? Has the country stopped growing? Has it stopped investing? Has it stopped attracting talent, business and capital? Has its long-term strategic vision disappeared? In my view, the answer is no. What has changed is short-term sentiment. And sentiment can slow markets temporarily. But sentiment alone does not define long-term value. For those who genuinely believe in the UAE, for those who understand its strategic direction, and for those who are thinking in 5, 10 or even 30-year timeframes, this period is not necessarily a reason to retreat. It is a moment to stay informed, to stay calm, to separate emotion from evidence, and to recognise that this market, as history has shown repeatedly, has a habit of bouncing back strongly once uncertainty begins to clear. And if you are currently evaluating your own position within the UAE property market, the most important thing you can do is separate temporary noise from structural reality. And if you'd like to discuss how current conditions may affect your strategy, your timing, or your investment decisions, please feel free to reach out.